Hi, it's Lee, and welcome to the Tesla Economist. I was speculating before that we might see a price in the stock drop in Q1. Now, you know me, I'm not one to keep an idea and reinforce it with confirmation bias as much as possible. This is the worst thing you can do when it comes to investing, and especially when it comes to trading. And this is a fast-moving industry, following an even faster moving company, Tesla. Things change at a rapid pace. It's imperative to stay up with it all and adjust your tactics accordingly when necessary, and simply be honest with yourself. Now, if you recall, I've been making some bold predictions about Tesla's future stock price, pretty much planning it out all over until the end of 2023, with roughly how I see it all going. I'm still trying to build or leverage my position, so trying to time it all in. My main prediction was that we should see a run-up this year as Tesla ramped up Shanghai so much and cranking out these new low-range Model Ys like no one's business. Well, not no one's, Elon's business. However, I was predicting a possible slump for Q1 due to the fact that Tesla are still struggling a bit with the 4680 line, and instead they've been using 2170 cells, which they've been stockpiling over time. However, when these new factories ramped up, they should get through this stockpile fairly quickly and deplete it, thus resulting in a drop in production from these factories. However, we have seen a different pattern since. It sounds like Tesla are going to be ramping up Berlin to volume production around the start of Q1. Now, how can they do that without enough 2170 cells? Well, I think they've somewhat pivoted from using 2170 cells there to selling standard Model Ys instead, likely with BYD's blade cells. I mean, it sounds like we could be talking about more than 20,000 vehicles to come out of Berlin just in January. That's massive. And if I know Tesla, they might keep ramping that line throughout the rest of the quarter. It's possible Berlin alone could do almost 80,000 vehicles just in Q1, at least according to what we're being told. Okay, sure, there is a potential energy crisis they are facing there as well, so let's not get too far ahead of ourselves. Tesla can't control everything, although they do tend to mitigate such crises like these exceptionally well, at least relative to their competition. Have they even got past their chip shortage yet? Oh, right, no one wants to make their old chips anymore, do they? Therefore, Berlin will likely have an even higher production rate than Q4, which is really good news. Well, kind of. I was hoping for a little drop to do some trading, but it's good news for the company. However, we do still have Texas. Tesla are not going to start selling those low-cost, low-range Model Ys in the US. No, they're not good enough for Americans. Well, at least not according to Elon. His market research shows that Americans need longer range. Hey, even Mary Barra said the same thing. And if there's something that GM are good at other than lying, it's market research. So it looks like Texas will be stuck with 2170 cells until the 4680 is properly ready. However, like we say, we're depleting that stockpile. But I'm not sure Tesla are genuinely really trying to ramp up that line with the 2170 cells currently anyway. I would say they have done the numbers and worked out they only have X days or so of cells before the level they have plummets and they have to cut production. So in the meantime, they're running the lines relatively slowly and instead working on them, improving, correcting and making them more efficient, removing parts and processes for when the time actually comes to ramp them up properly. Therefore, I don't think Texas will drop that much either when we get to Q1. I think it may just maintain a relatively low rate for the rest of this year in the first place. It can't drop if it doesn't rise first. Elon or anyone else has not mentioned anything about hitting volume production there anytime soon, or targets for that line. They're being somewhat coy about it all. However, what I think will likely happen is that they can likely maintain this rate with the stockpile they have, supplemented with the 2170 cells that will be available, and I think there will soon be more available. I believe that this had to play into the factor of stopping production of the Model 3 long range. Those cells are far more profitable on the Texas Model Y line than a Fremont Model 3, but still keeping the performance version, as that is likely pretty profitable too. Plus, they want to keep that new line going as much as possible to keep improving it. It's still very new. Then on top of that, we also have Megapacks, now resorting to LFP cells, thus freeing up a few more 2170 cells. Likely not a massive amount, but it still helps. And we have such an abundance of LFP cells So Tesla can crank out more of those Model 3 rear-wheel drive versions there, which will be very profitable anyway, due to the fact they're likely now going to also get $7,500 off for consumers. Of course, this is entirely subject to Tesla's progress with their 4680 sales. If they hit volume production on those during any of this time, then all bets are off. Well, more likely more bets are on, at least for me, with options, because that is kind of exciting. Then a little bit of icing on the cake too, as we also hear Fremont ramping up and potentially reaching 14,000 units a week by the end of the year, which will be maintained through Q1, and possibly even more ramping up there too. I mean, that is by no means nothing. Perhaps not far off 40,000 units more from Q2. And remember, Q2 was fine for Fremont. It was a good quarter. It wasn't getting hit with lockdowns or a money furnace. Of course, Shanghai is just full steam ahead these days. Sure, there are all sorts of concerns with the Chinese economy, but there's always something up with the world somewhere. It's possible that Shanghai is at a run rate of even more than 100,000 a month in Q1. We were told potentially 110 to 120,000 after the upgrades, assuming the Model 3 line will get up to 3 shifts. And we're only talking about vehicle deliveries here and profits. Well, we also now have potentially a profitable energy business. Okay, sure, it might not be that big compared to the auto business, but it's still not going to be nothing, and will do its bit to help out. I'm expecting over $100 million extra profit from this in Q3 from energy, so perhaps we are getting close to $500 million in Q1. Add to this, the Lathrop Megapack factory can't be too far from completion either. They broke ground on it a year ago, so high possibility it may start production around this Q1 as well. If that starts cranking, then we might be close to $1 billion in profit when it's running, and possibly higher after that. Yes, that's right, Tesla's energy business is on its way too, which I can guarantee the markets have not factored in, nor many analysts either. Of course, by this stage, all the ASPs should have pretty much caught up, even possibly the $66,000 Model Y price, which of course would now be $58,500 with the tax credit. That kind of sounds like good value now compared to $66,000. I think as soon as many of these Tesla prices start reducing, they really are going to feel like exceptional value, and demand will be higher than before they raised the prices in the first place, as it's now added to a perceived value. So my outlook on Q1 now is that Texas could remain flat, but not drop, and at least be making some sort of minimal profit. Berlin will continue to ramp, subject to energy. Shanghai should keep killing it. Fremont should be good. Tesla's energy business should be growing. So Q1 should be good. And this is all based on if the 4680 doesn't hit volume production. And the last time Elon talked about the 4680 lines, he said they were expected to be going better than this scenario I'm outlining. In fact, it was the worst case scenario that they don't ramp until Q1. So they could very well ramp in Q1 too, meaning it will thus become an outstanding quarter, and I completely excluded 4680s from all this analysis, although I think a 4680 ramp would go over the market's heads until they actually saw it perhaps 6 months later reflected in the financials. Anyway, I might do a production and earnings estimate on this too. It'll be rough, but might be good to know. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.